So hello guys, and this is All for Men. So as you can see, I decided to reveal my face, so hit a like to this video to support me. But what's more important, that in today's video we will be focusing on a project that recently generated a lot of buzz and was listed on all major exchanges within just a few days of its launch. And you might have guessed from the thumbnail that it's called StarkNet. So as I typically do at the start of each episode, I will try to explain what this project is, who created it, and who supported it on early stages. And later on, we will be delving into tokenomics and token unlocks in general in order to determine what kind of valuation this type of project may have, when it might be an advantageous time to buy, and how it could potentially grow, right? So I will share my personal take, which definitely may be incorrect, so please keep that in mind, guys. The goal is to provide my subjective opinion for your consideration. So let's not waste time. As usually, hit a like, subscribe to the channel, and let's get started. So what exactly is StarkNet? I'm still trying to fully understand what it is all about, but I like to think of it as a second layer protocol on top of the Ethereum blockchain, or like layer 2. And the purpose of StarkNet on Ethereum is to scale the Ethereum blockchain itself, to make it cheaper, faster, and more decentralized. Yes, decentralization is still the key. So StarkNet uses some novel cryptography in its design. From all the articles I've been reading to prepare for this topic, I haven't found anything fundamentally different in StarkNet's approach compared to other layer 2 protocols like Arbitrum or Optimism. But we have to realize that the goal of this kind of projects is the same, to scale Ethereum. And I think at this current stage, StarkNet is not so different from Optimism and Arbitrum. The liquidity on Optimism and Arbitrum will likely move to StarkNet in the future as the technology matures, but in my opinion, not right now. And as StarkNet develops, we'll start to see more differences emerge, but not at this current point in time. This is just my personal opinion on the question of whether StarkNet is just another layer 2 protocol or something more innovative. The core purpose seems very similar to me. So let's now look at the team behind StarkNet and Starkware. Starkware is an Israeli tech company founded in 2018 by Eli Ben Sasson, one of the co-founders of Zcash. And if you examine Zcash's history and performance to date, you'll see that this previous project hasn't been very successful. So I'm pointing this out that you don't automatically assume that new projects funded by seemingly impressive teams will necessarily succeed, right? Just because founders have raised a lot of money or come from prestigious backgrounds doesn't guarantee their current ventures will thrive. However, we should acknowledge that Starkware's development team has secured funding in recent years from some highly regarded investors in the crypto space. As you can see from the screen, that this project has been funded by venture capital firms and investment funds, including some big names like Multicoin Capital, Sequoia Capital, Paradigm, Coinbase Ventures, Pantera Capital, and even Ethereum Foundation with Vitalik Buterin himself. I don't quite recognize all other investors, but there are around 30 of them in total here, and that's a lot. I named just the major ones. And all of them have provided funding of around 280 plus million of dollars for this project, which may definitely seem like a lot, right? So the company went through multiple stages of funding, including seed round, Series A, Series B, Series C, and Series D rounds, where seed round and grant rounds were also mentioned as funding rounds. And in each round, investors contributed a certain amount of investment capital, though the specific amounts invested in each round are not readily available online. So I'm quite interested in learning how many StarkNet tokens were purchased by investors in each funding round. This is notable because in the very early funding rounds, investors could get a large allocation of tokens for relatively little money invested. For example, StarkNet investors received an 18% token allocation for just $6 million in the early rounds. And in contrast, later funding rounds like Series D involved much larger investments, like 100 million for just an 8 billion valuation and 80 cents token price, implying 80 million of tokens went to Series D investors. And in total, it seems that investors have received around 18% of the total token supply, which is over 1.5 billion, around 1.8 to be more precise. The key difference across rounds is that early investors get a large percentage of tokens for small investments, while later stages involved larger dollar investments for smaller percentage allocations. So the most significant profit is usually made in the earliest funding rounds, where investors contribute a small amount but receive a substantial allocation of tokens. So this high valuation doesn't necessarily mean the price will decline. Investors in later rounds frequently do not receive entry at the same high valuation. And if by any chance we will see the same price as early investors get in with, it may indicate issues with the project's prospects as well. To be honest, I was quite confident that this wouldn't happen with StarkNet, and as expected, StarkNet launched at around $2, then rose to $7 before correcting to the current 1.6, $1.8 range. By the way, guys, a short advertisement, please do not skip. Maybe you'll find it useful. I'm personally using Tangem Wallet for holding any crypto in general. It is a self custodial hardware wallet that gives you absolute control of your private keys. It has been audited by Kudelski Security, an independent Swiss audit company. The chip has the highest certification level EAL 6 Plus, which guarantees the high level of security of your assets. You can find the report on the official Tangem's website, everything is transparent. And unlike other wallets, Tangem comes with 3 cards, and what I personally like is that it is shaped like a card, looks like a traditional bank credit card, and it can fit anywhere, can be taken anywhere, and these cards are used for generating and storing your private keys instead of a recovery seed phrase. The wallet supports over 6,000 different crypto assets across 37 networks. You can also access decentralized applications, and through the secure Wallet Connect protocol, the mobile app also allows you to trade on exchanges, buy NFTs, and stake your assets. It is absolutely easy to set up and easy to use. And for the pack of 3 Tangem cards, 1 wallet. I really do recommend you to have 3 because it has a higher level of security. It will cost you around $70. This makes it one of the most affordable hardware wallets when compared to options like Trezor models, for example, Ledger or others. And if you use promo code ALL4MEN, you will get additional 10% discount. So please go ahead and explore the website for yourselves. If you're looking for a good quality wallet to store your crypto, I do suggest Tangem. The link you can find in the description. Thank you for watching, and let's continue. I believe the various investors likely have agreements and mechanisms to rebalance their positions. Investors in later rounds like Series C and D, who contributed at higher valuations but received fewer tokens, they probably have sale priorities or other advantages over early investors. And this dynamic applies not to just StarkNet, but to many other projects with multiple funding rounds over the years. So whenever you see a project with several rounds of rising valuations, understand that later investors may have structured advantages despite the high prices they paid. And I think it would be interesting to know what is the estimated average cost per token that investors paid across the various funding rounds. So the volume of tokens different in each round. Unfortunately, we can't calculate precisely, right? Because we only see the top 2 later rounds. We also only know the valuation in Series C, Series D, but not in others. So let's try to calculate a reasonable average price. First of all, let's determine approximately how many tokens went to investors across all rounds. Here is the total volume, 10 billion StarkNet tokens. Let's take the total invested funds to be 282 million. And I'll divide the total invested funds or net liquidity by the total tokens received by investors, which is approximately 1.82 billion. And we see a price of around 15 cents, a reasonable middle ground. That results in an average fund purchase price that we can estimate here. So now let's try to discuss the tokenomics. So the total token supply is 10 billion of tokens, as you can see on the screen, which is quite similar to other projects like Arbitrum for comparison purposes. Out of the total supply, 2 billion of tokens, or approximately 20%, went to early participants like assistants, consultants, the team, and likely investors as well. I think 2 billion of tokens going to this group is quite a lot and won't just end up in obscure hands. There is a list of who will get these tokens, which I believe includes investors and the team. So we've established around 20% or 1.82 billion of tokens are for early participants. Next, we see that 10.8%, around 1 billion of tokens, are allocated to the Starware, then Foundation, Treasury, and Community, which will essentially be used by the team. So the team and investors have a large portion of the supply. Therefore, we can logically conclude that if there are substantial interested parties, there is a possibility of manipulation. So let's quickly discuss how Stark tokens will be unlocked, as this whole 10 billion token issue will not immediately enter the circulating supply. We know that 7% were airdropped to the community. StarkNet has already distributed this airdrop to wallets. And when the token listed on exchanges, those who participated in early activities and received the airdrop most likely came and sold them, right? So in general, 10% will be the primary circulating volume initially. And then from February 20th and into March, there should be no additional unlocks. These 10% of total supply should remain circulating. And starting in April, larger unlocks for the team, foundation grants, community members, and investors will begin. The key point is that investors and early participants will start to unlock tokens beginning of April 2024. But with the recent news we all have heard about, that the token unlocks have changed slightly and they will not pour any more huge amount of tokens to the market directly, which is a good news. Unlike other projects, same Optimism and Arbitrum, that had 1 year locks for investors, StarkNet doesn't. Investors have a 2 months lockup only, so their 40% of tokens will enter circulation over the next 2 years. It's like a very short schedule. And now I'd like to introduce you to the ecosystem so you can get more perspective. There are over 120 different projects, with around 40 being the major ones. I definitely want to highlight one specific project, and it's called ZK Land. So, this is a project I'm keeping a close eye on and will provide details about it on my Telegram channel when it launches, including my investing strategy and profit targets. I just want to say now that crypto lending will be one of the most promising market segments, and StarkNet is one of those projects that you should not get rid of quickly. So, this is a long term project to hold. The full potential will be realized over time as the unique technology is developed. And it's important to get in early with airdrops to understand where the coin price could go. So, the airdrop on February 20th was huge, around 900 million of tokens. This shows the developers are committed to the decentralization. The total value locked TVL has also been growing steadily to 71 million at launch. Another good metrics of progress, right? So, in my opinion, in overall, StarkNet is a project to support long term rather than rush to sell the coins. StarkNet is currently ranked in the top 60 cryptocurrency approximately. It has a market cap of around 1.5 billion of dollars at the moment of this video recording, which represents very rapid growth in capitalization. StarkNet has attracted investment from top funds with total investments of 282 million of dollars at the valuation of 10 billion. And looking at the average purchase price of around 15 cents per coin by these funds and comparing it to the current price of around $2 per coin, we can see that these funds have achieved very good returns. And considering StarkNet's current price movement, it seems that the coin still has upside potential from the fund's investment price. So the first thing I would like to do is to wait a bit more, but if we consider the price at which the cryptocurrency has been trading in a narrow range for a short period, the price is around $2. Basically, after analyzing projects in the current market phase that are starting to see some growth, right, they typically undergo a correction of around 40%. That's my personal observation. So I already bought StarkNet for just a tiny amount at around $2, but I've identified and marked for myself the first important support level around $1.30, where I'm interested in starting to accumulate the cryptocurrency more and more, assuming it does correct as expected. Even allowing for aggressive further selling, I believe $1.30 is an achievable buy zone. So $1.30 area is my zone of interest to begin building a position in this project, which means that I'm going to wait a little bit. With more trading volume, I'll be able to better interpret the chart patterns and more accurately predict certain price levels where the price could potentially go. At a minimum, guys, as I said, my first target that I'm interested in, assuming I'm able to buy the coin starting at $1.30 and less. And I won't be selling it before it reaches $5 to $10. I won't be in a hurry to sell the coin at all. That's at least 4.5 and slightly more X from the average price I buy. So, to conclude, the project is very unique from both the investor's perspective and technologically. A tremendous amount of money has been invested in it. It is at the forefront of the crypto industry. The technology behind it is powerful, and the economic model is pretty well constructed with projections through 2031. The token has immense potential for growth and demand. I always advocate having available funds in any market condition to be able to invest in promising new projects like this one that are launching now. These fresh, powerful initiatives are more interesting than older one established projects. So I think StarkNet is one of those promising projects with the ability to produce excellent returns. That's it from my side, guys. I hope this was informative and interesting. If you like the content, hit like to this video so I'll try to showcase more of these projects. Also, subscribe to my Telegram channel. The link is in the description. So thank you all for watching and see you in the next videos.